Hi guys, welcome to Dividend King Investing. This is my third video now, and I'm going to be talking through today the comparison of Trading 212 versus Barclays Smart Investor. So comparing a traditional platform or investment platform, which is Barclays, against a new and upcoming trading platform or investing platform, Trading 212. And I know that this can be quite a daunting uh, process when you're starting out in investing and deciding which platform you want to put your money in, and that you want to trust your money to. So I've given a quick breakdown of what I've learned over the last couple of years of using these two accounts. I originally started using Barclays Smart Investor when I started investing. I wanted to go with the traditional brokerage that I could trust my money with and that I felt more comfortable with. But then after a while, I've realized the effect of fees, and I switched to Trading 212. So today I'm going to be talking through these two accounts. Now, the things I'm going to be considering principally in this video are the fees, so trading fees and account management fees. How do these compare between the two accounts or the two platforms? Then the ease of use. Is it user friendly? Is it an enjoyable thing to use? One of the apps versus the other. And then are there any hidden costs? So in terms of the platform fees, Barclays has a minimum account maintenance fee of £4 per month or £48 per year, which is actually quite a lot of money. Then they have a transaction fee for trading funds, which is £3 per trade, and a transaction fee of £6 per trade for any other investments. So that would be things like stocks and shares. So in comparison, Trading 212 has no account maintenance fee, and there's no minimum requirement, or apart from I think £1 that you'd need to invest. So they have a minimum investment amount of about £1. But there's no fees. Then there's no transaction fees, so it's essentially free trading. So it's clearly head and shoulders above Barclays in terms of cost. But you might be wondering, how do they make their money? Because I was talking to one of my friends about it, and he was thinking, well, surely there's fees. Surely, they've got to be making some money, maybe on the spread or something like that. How are they making their money? And I'll go into that at the end. But going back to the fees, Barclays has, on average, I was thinking, if you make 52 trades per year, a typical investor might invest once per week. So they make 52 trades per year of stocks, costing £6 per trade, which equates to £312 per year. Now, if you add the £48 per year account maintenance fee, that equates to £360 per year, just in fees. So I was thinking, okay, well, what would happen, for example, how much would it cost if I was to invest £100 every week for a year? So that would mean I'd invest £5,200 over the course of a year. Then if I have fees of £360, that equates to 7% of that money that I've invested being paid in fees. Now, when you consider that the S&P 500 has averaged 8% per annum gains, that means that if you invested £5,200 in the S&P 500, you would actually only be making, on average, 1.1% per annum in gains, which is terrible. That is less than the rate of inflation. So, and you're also risking your money, and whereas you'd be probably better off almost putting it in a just a rubbishy savings account, really, if you're investing such small amounts of money on a regular basis. Whereas with Trading 212, there's no fees, so it's actually much more affordable, especially if you're a small investor with, an investor with less immediate capital up front, smaller sums of money. It's much more affordable to invest in Trading 212. So I'm going to go into a bit more detail of the Barclays fees. So on their website, one of the things that they show is that, okay, they say, what might it cost to invest with us if you invest up to £24,000 in funds and make 2 transactions per year? So the customer fee is £48 per annum, this fee here, or 0.2%, which is a very small number. Brilliant, £48 per year for, investing £24,000. That's nothing. Now, if you invest £3 per transaction in funds, you'll pay £6. Then that will cost you only £54 per year total, which sounds great. But the problem with this is that assumes only 2 transactions. And how many people in a year are going to invest £12,000 only twice? £12,000 twice a year, it's too much money in one go. You want to be averaging that out, paying into your account on a more regular basis, say once a month. £1,000 a month would be a much better and less risky way of investing, so that you can average in to the markets and you're not left with big losses or big gains, because you've only been, well, big gains would be good, but the thing to be concerned about is big losses, because if you happen to put all your money in at the top of the market and then it immediately drops, you're then down a lot of money for a long amount of time. So it's better to average in over time, and that's called pound cost averaging. So, okay, well, how much would it cost you if you made a weekly transaction and you paid your annual fee? You'd be spending about £360 a year, or 3% of £12,000, or 1.5% of £24,000, which isn't too bad, but 1.5%, it's still a significant cost. So in terms of the platform ease of use, actually I'm going to go back to fees for a minute and show you something. So in terms of the fees, Jack Bogle, who was the creator of the Vanguard platform, he is a strong proponent of low fee investing, and that's what the Vanguard fund is for. So he will go and explain how much on average investors make and the effect of fees over the course of your life degrading your gains.
We all get a return from the stock market in the long run, the returns created by American business. Now let's say, for the purpose of argument, that that's an 8% return. That's what we all share. There's no way around it. In an 8% market, we don't share 8.5%, nor do we share 6.5%, whatever it might be. We share 8. So that is the gross return that's created by American business. But we in the markets get the net return after the insanely high costs of financial intermediation. And those can be as much as, say, 2% a year. And it's very high. It's not only management fees, administrative fees, marketing costs, turnover costs. Funds are constantly buying and selling securities, and it turns out to be about 2% less than the market return. So we all earn 8%, say, we all get 6%, and which people don't think nearly enough about. Over an investment lifetime, we put up 100% of the capital, we take 100% of the risk, and we get about 30% of the market's long-term return.
Now I'm going to discuss the platform's ease of use, how user-friendly it is. With Barclays, I found that it often is a bit of a faff to log in your security details. I also had a problem where, because I didn't open a current account with Barclays, I'm unable to sign into Smart Investor using their mobile app for some reason. And the problem is that I can't actually get in touch with Barclays. You spend an hour on the phone trying to sort this out, and it's a massive pain in the arse, and it's a waste of time. So I just instead log in to via my phone through Google Chrome and go through their website to log into my investment account, which is clearly not a great situation. It's also difficult to find some of your holdings, and it just takes a while to get used to the platform. It's not as user-friendly as Trading 212. Otherwise, it's fairly easy after you get your eye into it, and it's perfectly reasonable. But in terms of Trading 212, the passcode and login to the app is really easy. It's like signing in with your phone. Then it has a very user-friendly. The app is very user-friendly. It's just, you know, very visually pleasing and satisfying to look at. Very easy to maneuver around and find everything. Then there are nice, clear displays of your holdings. So here, for example, I'm just going to play a clip of my holdings. So when you log into Trading 212, this is the sort of thing you'll see. It'll show you your percentage of your ISA that you have left to invest in. So, you know, in an ISA you get £20,000 per annum tax-free that you can invest in the ISA, and I've currently used about 17%. So that's nice that it shows you how much you've used. It also shows you your portfolio value, your gains, your total return at the moment, and then you can also scroll down and see all of your investments, all of your holdings, which is really nice. You can see your portfolio. You can share a link with your friends, and you know, if they sign up to Trading 212 using your account, then they will receive a free share, and you will also receive a free share. So as you can see, it's quite a nice thing to see. You can also find your transactions quite easily. They're under history. You can see I bought some. These are my deposits. It'll also show you your dividends. So these are my dividends I've received. So that's very easy to find. Now, in terms of costs or hidden costs, Barclays highlights their costs on their website, and when you're going through the application progress to open an ISA or an investment ISA with Barclays, it'll show you the costs and it breaks it down. It can be a bit daunting, a bit confusing at first, but it's ultimately not too complicated. But fundamentally, there are significant costs incurred when investing with Barclays versus a free trading platform like Trading 212. Now, in terms of hidden costs on Trading 212, you know, one of my friends that I was talking to was saying, surely there's hidden costs on Trading 212. That, you know, that how do they make any money? Why would they allow you to trade for free, whereas other brokerages are charging £6 per trade? Now, what they charge is in their CFD trading account. So there's another aspect or section of the app called the CFD account where you can trade CFDs, and this is something where they make money, so they do charge. And these are risky things to do. I personally avoid this part of the app and I stick to the ISA investment section, so I don't incur any costs. Then otherwise there are no hidden fees. However, I have read online that they might potentially monetize some premium features in the future, but that's neither here nor there really, and you could have those or not. But currently the case is that there aren't any hidden fees. So I hope that this has been a useful video for you and that you've enjoyed it. Let me know in the comments from your personal experience whether you consider traditional brokerages to be worth the fees or not, and what your opinions are of Trading 212 and free trade, for example. But yeah, give it a like and subscribe if you like the video, and yeah, see you in the next video.